this. There we go. Hi, this is Jim Jones, and I'm speaking with Professor Jerry Skees about working through risk, in particular, working through risk in the agricultural space. And Jerry is now the founder and executive director of Global Parametrics. He was also the president and founder of Global Ag Risk and was a professor at the University of Kentucky in agricultural economics, dating back to 1981. So, Jerry, if you could just give me a little bit of background on your current role with Global Parametrics and what all is going on with that right now.
Well, Jim, thank you for that opportunity, and it's great to be here. Uh, the first correction I might make is that I'm no longer an executive director of Global
Okay.
Pyramid. We made some changes. That was purchased by a group out of Zurich called Celsius Pro, and in the last year, I've basically taken a role of being a casual advisor to Global Parametrics, if you will. And what I'm doing now is I stood up a nonprofit that I founded some years ago called the Global Center on Disaster Risk and Poverty. And we're doing a major project with the chief economist out of the Food and Agriculture Organization in Rome on financing shock driven food crisis. So that got me busy. I've got a few other things happening, but my role at Global Parametrics is much more as an advisor. Yeah.
Yeah. Now, and Global Parametrics, as I understand, is kind of focused on low and middle income countries. Is that correct?
Correct. It was a company that the British and Germans supported initially with some equity and debt, and that all transformed when Celsius Pro purchased the company about a year and a half ago. But the major part of Global Parametrics was to actually be able to manage a facility called the Natural Disaster Fund. And the British and Germans gave roughly about $60 million of risk capital so that we could innovate in low and middle income countries. It was really specifically targeted at what's called ODA countries, with the idea that it would be innovation in the parametric insurance space for a wide range of things. You know, agriculture and more is what I say all the time, because agriculture may have been where I started, but as you know, and as the world knows now, when you talk about event-based structures with parametric insurance, you open up a lot of different opportunity sets. So that's real important as well.
Sure, sure. That's great. And what do you have going on now with Global Parametrics? You're an advisor. Where's that at with the Natural Disaster Fund?
Well, I actually will get to join in London next week. There's going to be a special event uh, profiling the Natural Disaster Fund because it's Climate Week in London next week. And that event's going to be in the mayor of London's house. And the mayor of London's actually going to introduce the Natural Disaster Fund and Global Parametrics. Uh, and I think what's going to happen there is they're going to profile some of the really important risk programs that have been put together over the years now with Global Parametrics and the Natural Disaster Fund. And by the way, you know, it may be, you know, I mentioned that there's about 60 million there, but Hanover Re has come in and matched that. So it's basically over $100 million that is being used very strategically to crowd the market in with programs that others might not take on, you know, that take a lot of heavy lifting with some technical assistance and then find their way. Because, you know, innovation, you make mistakes along the way when you do innovation.
Yeah. So now, is this more publicly funded or privately, or is it a combination of
It's a public-private partnership as it was initially. But today, the management of global parametrics is strictly private between the
Okay.
Celsius Pro group and the global parametrics group that's sitting in London still. So Celsius Pro is the holding company. Global Parametrics is under Celsius Pro. So those are both private companies, but they have a responsibility of managing the capital that's public capital, the amount of capital that was given by the British and German government. So that's a real important distinction to be made. And when we were building it, I was going back and forth to London quite a few years before the decision was made to actually start Global Parametrics. There were a couple of choices along the way. Should we do this as a nonprofit? Should we do it as a for-profit? We chose the for-profit route because nonprofits, you're always trying to get new money, and if you can actually make it sustainable and have the revenue streams that keep the engine going in a for-profit world, we felt like that was a better pathway, and it's working now.
That's what I was going to ask is, this is obviously a hugely important issue is investment in climate resilience. And how do you get that investment and how do you make it sustainable and not just a one-off, kind of investment? So it sounds like the for-profit model is the model that you're working with. It's working, but it had initial contributions from the government, from the British government and the German government. Do you see a trend in the investment in climate resiliency like this?
Yes, there's a lot of new things happening in this world. Many companies are in place now to provide the data, for example, and to do the structuring. Uh, there's any number of companies that have come into that space to take globally available data sets that include the hazard as well as the exposure in order to facilitate structuring of parametric products for the industry across the board. So you see that side of things. You see quite a few things happening with the development community, the development financial institutions. This program that I'm working on now with the FAO, it's been endorsed by the G7 under the Italian presidency, and on July the 1st, I'll be in Rome, and we're launching this program with hopes that there'll be some nice checks written so that this program, which will be very much targeted toward anticipatory action,
Right,
forecasting events,
right.
getting in front of the problem so that you can actually mitigate a food crisis is really an important world of innovation now. We see any number of partners doing those kind of things as well.
Yeah, I'm gonna have you focus on that a little bit later on this whole idea of where things are going and the role of anticipatory action and parametrics on this. But let's do this. Let's back up here to you were a professor in agricultural economics. I'm always, fascinated to hear the story. How did you discover insurance in all of this? And what was your first experience with, well, I guess what we call parametrics. I think indexes,
Sure.
kind of where things were called in the agricultural space. So just give a little bit of a background on that.
Well, I did my PhD at Michigan State University, and during my PhD, I discovered this book called Agricultural Risk Management, and it was done by Australians because Australia has a lot of risk, and it inspired the way I worked on my PhD. And I actually did a PhD dissertation that did a Monte Carlo simulation using risk and putting a lot of different pieces together there. And my area of emphasis was institutional economics, public policy. And coming out of graduate school, guess what? Crop insurance in the US is a very important public policy program meant to support farmers in difficult times. So early on, I started working on US crop insurance and did quite a few projects there, did a lot of good academic publications with other colleagues around the country, and was invited to be the research director for the improvement of the federal crop insurance congressional commission. And I spent a year in Washington, D.C. in 1989. During that time, an old journal article came to my attention on area yield insurance. And guess what? It was done by a professor who studied at the University of Chicago in
Okay.
the 40s. And he became a professor of agricultural economics at University of Illinois, by the way. But in his study, he was trying to fix crop insurance in the 1940s. And so he proposed doing crop insurance based on an area yield rather than individual farm yields because of the moral hazard adverse selection that is a problem with all types of insurance, right? And by what's interesting is he did this work in 1940s, late 40s, and he had three members of his PhD committee, D. Gell Johnson, T.W. Schultz, and Milton Friedman,
Oh,
two
wow.
Nobel Prize winners, right? So they told Professor Hawkrow, this is really good work. You should do this. Well, I picked up his article. We started pushing it into the US public policy arena, and we were given the opportunity with several different collaborators to build what was called the group risk plan, was based on county yields. And what a pleasure it was that Professor Halcrow was still alive. So I
Um,
invited him to introduce the program, and this was in 1991. And of course, he told that story of his committee, and they had they had suggested that he should go out and keep writing about this. And you'll see in the record that he was doing this type of work through his career, and he was delighted to see that we were actually doing it. Um, a lot of interesting dynamics were happening at that time, but the fundamental idea was if you do something that's highly correlated with the farm yield, but independent of the management of what the farmer might do, that could basically create losses because of adverse selection or moral hazard, you would be able to create a more actuarially sound program, right? So
yeah. So, I mean, that's a principle. You're always trying to reduce kind of adverse selection and people not, and as you said, moral hazard, where they're not taking care of the proper, maybe not, using the right inputs or cheaper inputs or something like that. And so then they, say, well, I didn't get a good yield. Now I can go to the government and get, paid for this. So this is saying, okay, hold on a second. We're only going to, pay you based on what is going on in the overall area at the time. And so you would set your trigger based on that for the payouts.
exactly.
And,
And we did a lot of analytical work. Mario Miranda at Ohio State did a really nice publication and demonstrated that as a hedging mechanism, it actually worked very well. And we followed that up with a lot of farm level data, including farm level data from the Illinois record keeping system, the Kentucky record keeping system. So it was being demonstrated that it was a very effective way to manage risk for farmers. And what was happening is a lot of, as you might imagine, you were starting to get a view that you could actually segment the market a little bit. And I should avoid the word saying good farmers, but let's just say farmers that are not going to be prone to adverse selection and moral hazard would be attracted to that side, and the farmers that were more involved with adverse selection and moral hazard would continue the individual programs. So we saw some things happening there that created a different dynamic. It was a great experience. we still learned, that it didn't work everywhere, and there were mistakes that were made, and we tried to make adjustments along the way. But
And,
soon,
and where did we end up in public policy on that?
well, that program has had a lot of influence on many programs that the government is using now, where they like area revenue insurance, area yields, trying to provide that basic foundation for the correlated risk problem that creates obstacles for a lot of insurance companies doing things. So, we've seen some evolution of things, but in the same time, the government has had a tendency to provide heavy subsidies for crop insurance. And one of the ideas was that this might be a way that you could reduce the level of financial support. And at one point, we even put a trade on the Chicago Board of Trade to trade Iowa corn yields
Really?
experimentally. And the idea was that that would hedge the reinsurance.
Oh, yeah.
So that was happening in the mid 90s. And I was there for the ringing of the bell for the launch of the Iowa yield contract on the Chicago Board of Trade. It didn't make much progress, but
Yeah. Well, but it's an example of innovation, and you kind of move forward, and sometimes, many times, they don't go, as far as you might like for them, or it's just there's a natural, um, end to it, or a natural limitation that
there's political economy involved as well.
yeah.
So,
Well,
sometimes
yeah.
markets work only as far as the political world will.
Well, I
Uh,
think that's a good lesson, isn't it, though? Yeah, there are limitations, not necessarily from the economic side, which could work perfectly well, but you have political limitations there.
we
Yeah.
certainly do.
Yeah. Interesting. Well, so how do you go from crop insurance here in the US to getting involved in agricultural, I guess crop and mainly crop insurance in other countries like Peru and other places around the world?
Well, I guess what was happening is the academic community, they were watching what I did with what we did. It wasn't only me. It was, never forget that. There's lots of people involved in every conversation I'm having. They were watching it, and I got some calls from people in the World Bank and also from IFPRI, the International Food Policy Research Institute, saying, "Hey, this is interesting. Maybe we should try this in some of the emerging economies in the world." And it was such a fascinating thing. There were so many coincidences that you just couldn't ignore it. And about 3 years after we did the group risk plan, I went off to Nicaragua with a gentleman called Peter Hazel and some people from the World Bank, and we started pushing, discussing, could we do rainfall insurance?
Hmm.
And
So you
basically,
moved past areas, so you weren't going to try to replicate area-based necessarily. You were looking at other potential um, correlations, such as
yeah,
rainfall to crop loss.
because the data wasn't there, in those countries to actually get a good estimate of the county yield.
Yeah.
The US, we've had the National Agricultural Statistics Service that's been involved in estimating yields for decades. So there was a reliable history, a reliable methodology, everything else. But now you go to Nicaragua, there's weather stations. So we started trying to think we could actually do something with some of the limited weather stations that had some historic data, so we could get a view of the underlying risk, price it.
That's great. So yeah, you're right. The data is a big issue, and the timing of the data.
Yeah,
I mean, my experience was in some of the countries in Africa is, yeah, you would get an area-based yield number maybe come out in March or the following year after the harvest,
yeah.
which doesn't, do the farmer much good if you're basing it on something that happens months later and they've already lost their crop and their income and and all the financial consequences of that. So there's a kind of a temporal challenge, I think, even if the data does exist. So,
And we encountered that, by the way. I got invited to go to Mongolia on the backside of a major zoo where millions of animals died in 2001. And and I looked at the story and I could see that because the Soviets were strong in Mongolia, they actually counted animals eye by eye. So they had a good historic record of mortality.
oh wow.
I said, well, I'm just going to turn the area yield on its head and create a mortality index based on the counties in Mongolia, which are called SUM. But the problem there was, as you say, the latency of it was way late. So
Right.
we actually created a system where we brought in the National Agricultural Statistics Service to get an early estimate of mortality. But still, it's not timely enough. Now, that program became institutionalized in 2014, and last year I was invited back to Mongolia 10 years later.
I know it was one of the big successes that they tout in this area. Yeah.
It was, but still, it didn't. The participation levels are not that high.
Okay.
The
Yeah.
government's not that happy with it because of that particular issue. And the timeliness is still not where it should be. They're making estimates, but the herders don't get paid until maybe late summer, where
Uh,
most of the animals have died February, March. So I was there trying to noodle around and give some advice last year about how to move that timeline up with some more timely data that would supplement that. So there's that ongoing process, as you're saying. The data becomes important. What are you trying to capture whenever you develop any kind of risk management program? And insurance is only one element of risk management.
yeah. Right. Right.
That's probably as much as anything. That's that experience. If you go back to where we were with the World Bank, after we did Nicaragua, the bank put a proposal together, and we did 4 countries. We did Nicaragua, Morocco, Tunisia, and Ethiopia to try to build some weather index insurance. And there was so much learning in that process. The scale was a problem, participation, education, um, lots of different limitations, constraints. But that that experience propelled a lot of other pilot programs, as you probably know, with weather
Right.
insurance.
Yeah. Well, I think one of the challenges with just the rainfall is, what rainfall data are you capturing that's correlated is, you can't just have, well, what's the cumulative rainfall for a month, that and you find, well, that's not very well correlated to the actual loss. So you have to, have something, more granular than that. You have to think about the timing of the rainfall,
Timing is important.
in this
And
season, the type of crop, the type of soil. So there's a whole lot of things that go into this than just, well, let's figure out how much it rained this month and base a payment on that. So how
so,
how did you work through all this kind of a risk?
well, I guess one of my, as I look back on what we were doing early on, I wish we would have taken a different way of framing the problem, because we were always, in those early days, we were always trying to say, oh, we're going to introduce index insurance as a form of crop insurance. And when you do that, you've already got yourself under a spotlight, right? Because now, if the rain doesn't create a crop failure, or there's a crop failure when you think there's been rain, everybody's got a problem. That's basis
Right,
risk, right?
right. Yeah,
What
yeah,
I regret is what we should have recognized, in particular in a developmental context, when you're talking about smallholder farmers, crops, that's one part of their livelihood. There's a lot of other things happening there in that setting. In Nicaragua, Mozambique, Ethiopia, they're growing crops, they've got livestock, they've got livelihood strategies in lots of different directions. What we should have been doing was saying, let's create a business interruption insurance that captures the extreme drought, but recognize that that is providing financing when there's many different things going wrong, not just crop failure, but maybe it's the livestock, maybe it's the enterprises that are supporting agriculture in that setting. So I wish we would have done that. And as we've gone through the years, we've certainly recognized that the one of the best roles for parametric insurance is business interruption insurance.
Yes, yes. I think that holistic approach is something that, has evolved over time and seeing that, this is a system. It's and understanding that, it's not just one piece of the system. All these pieces can work together, including, the role of financing and uh,
Absolutely.
that kind of thing, and having the inputs and being able to purchase the proper inputs, and all of these things affect the overall outcome for the farmers. So, and did you find that what were your original products based on the insureds being the smallholder farmers, or were you looking at more of the meso level, the
Yeah.
microfinance
Thanks for that
institutions,
segue.
like cooperatives or whatever,
Yeah, it's really fundamental. And when we were working in Peru, the first thing we recognized is agricultural insurance had failed a couple of times because of extreme El Nino events and adverse selection. Because everybody in Peru knows when El Nino is going to create problems months before. And so what became my focus in Peru was, if we don't address the El Nino issue, you're never going to see agricultural insurance emerge. So we got real focused on first understanding how El Nino and the sea surface temperature from NOAA off the coast of
Mhm.
Peru
Yep.
was a very strong predictor of extreme rain and flooding in the northern part of Peru. And we actually created the first forecast insurance in the world. It was Gates Foundation support. We created a forecast insurance that used November, December, and would pay early before the flooding would start in February, March. And how did we convince the regulator? Well, the way we convinced the regulator was we were working with this, and this is when I had PhD students with me in Peru, by the
Right.
way. So this was really a nice project with lots of research, analytical reviews, talking to the regulator, talking to the insurance regulator, talking to the banking regulator. And what we saw was that in the previous extreme El Nino, all those microfinance institutions knew they were going to get clobbered. So they were already adjusting their loan portfolio well
Mm,
before the rain. So when we sat down with the regulator, we said, look, this is happening with your financial institutions. They're forecasting what's going to happen. They're already incurring extra cost and business interruption based on the forecast. So, as a business interruption insurance, doesn't this make sense that we would implement something that would pay before? And then it just created, Jim, it just created a wonderful discussion with all types of stakeholders. What would you do if you had money before?
think about all the things that you would, invest in differently, think about all of what the markets could be doing, and this, even I'm talking about the people who work in these small markets, what they could be doing. Yeah. Oh, yeah, it would be tremendous. And I think it's cool that you guys were already thinking about parametrics in this kind of um, holistic way with business interruption and even, anticipatory decades. I mean, this is kind of a hot topic right now.
Yeah.
But this is, Peru in what, 1990
No, it was about 2010,
or
2000.
2010. Okay, yeah.
We entered there in 2006, and
Okay.
that was USAID, and we could see the problem, so we applied for the Gates grant, and we got that in about 2005 or so, and it was 2010. Yeah,
Well, that's still a long time ago. It's in
yeah,
terms of
years.
what's going, yeah, in terms of, this has been going on, it's been recognized as a potential solution that's been out there that
But
is
that's also, Jim, back to your other question. This is when we started recognizing the MESA level was a good.
right. The middle level there with microfinance, with I guess the cooperatives, you'd put them in that, category
The water
too.
user associations of
Right.
farmers,
Right.
they could actually, when we had the stakeholder groups meetings with them in those northern parts of Peru, what did they say? Oh, we're going to go in and clean out the ditches. We people put rubbish in the ditches that are supposed to be there to take the water away, because this is a desert most of the time.
Right.
Extra financing they were going to get ready by actually improving the infrastructure that would help move the water out of the fields. Okay, so you just saw this whole collective view of how, if we're working together to manage a risk that's going to impact all of us at the same time, and that's the key when we're talking about these kind of risks. Since it's correlated, you have many people impacted at the same time, right? And so that experience in Peru also pushed me in a different direction, agriculture and more, right? Because we were working with the financial institutions, we were working with the agribusinesses, we were working with even the fishing industry that has problems with the anchovy catch because the sea surface has gotten warm, and they can't catch as much fish, and they have a big business interruption. So it just opened my eyes that these disasters and the way we were thinking about the insurance solution and the financing solution fit across a wider spectrum, much wider.
Yeah, and that's fascinating. But what it does, make me wonder though, and it creates another issue because I think one of the things that we have with insurance is that they're always concerned about covariant risk. All of your insureds having a loss at the same time.
Yeah.
So I guess now you really have to introduce the reinsurance component where it could be spread, so it's not consolidated in one area. So
So,
was that one of the things you guys had to work through as well in order to get the funding, or anybody to even support underwriting this?
well, we were already in that space when we were evaluating U.S. crop insurance and why is the government involved? And one of the reasons the government was involved was because of that correlated risk problem.
Right.
And what we were trying to do is say, wait a minute, there's market solutions where the government may not have to be as involved in the reinsurance side of things. So that's part of the reason we put the Chicago Board of Trade contract in
Yeah.
place.
Well, the capital markets are much bigger than,
Yeah.
what anybody else has, to be able to play. And so that's a good
And
idea.
the other thing that was fun and interesting at that time was we were watching weather trades with the energy market. So,
Right.
and that was happening at about the same time that I was out in the world with the World Bank saying, "Hey, can we do weather index insurance?" We saw Coke industry, we saw Enron, we saw a lot of different activity. I was in Enron, I was at Coke in the late 90s trying to listen to their way of thinking about how to hedge heating degree days, cooling degree days, for hedging energy costs. So lots of convergence.
Yeah. Well, but what that makes me wonder though is about, and it's more of a regulatory issue that you probably had to deal with back then, was, okay, is this a derivative? I mean, because what some of the other things you're talking about with Enron, they were hedging with derivative. So is what you're creating a derivative? And did you get that, pushback is, yeah, this isn't insurance, and so you have to deal with that.
We have, and if you go back to the natural disaster fund, it was organized to go any direction. And in fact, derivative was the first play. A fund managed capital. The easiest thing would be to do a derivative at a global level in a jurisdiction where derivatives are accepted, and then manage that flow of financing into the emerging economies. So derivatives is not a bad word. Where you're not when you're organizing derivatives with these types of parametric solutions, you're typically not allowing for active trading. So it looks a lot more like an insurance product because you pay a premium, you hold the risk. If the event happens, you make the payment. Now, I wanted to come back to the first contract we had with Global Parametrics was a network of microfinance
Oh,
with,
okay. Yeah.
yeah, with Vision Fund International. And what was so interesting for me is as I was going into London, working toward starting Global Parametrics, I met this gentleman from Vision Fund International. They're based in London, and he had a history in the insurance market, so he was struggling with how to provide insurance for climate weather events. But more fundamentally, he was motivated to do what's called recovery lending because they just had the typhoon in the Philippines, and Vision Fund came in right behind the typhoon and did recovery lending.
Ah, okay. So it's almost like with businesses have like a letter of credit or something like that. If something happens,
Yeah,
we'll give you the money at a predetermined rate or something like that. So, but
so
it's
I was really drawn into that, and we got a Rockefeller grant, and we worked through a lot of different analytical solutions there, and that's where I wanted to come back for sure. As I said earlier, insurance is only one instrument, and the
yeah.
way we organize with Vision Fund International is have some reserves to take care of the small things that happen in Cambodia with that financial institution, have access to contingent credit so you can bring in some extra liquidity, but also then have insurance as the last layer of risk so you can replace some of the capital,
Okay.
right?
Yeah, I think yeah, that's fascinating because you're hitting kind of every level of the risk that they're facing, and you have a different solution for each level.
Yeah. Just like we teach our children, right?
Yeah, right.
Savings first, then you start borrowing money, but for really bad things, you have insurance.
Yeah.
And I think there's what is kind of frustrating, I guess, for me is a lot of people kind of lost their way when they got into the weather index insurance, and they lost that part of the story. And they did it not for bad reasons, but it was more like, oh, if you're going to prove it works, we have to design something that pays frequently. Well, as soon as they got into that space, it was too expensive. It wasn't serving the purpose that it was supposed to serve for insurance, right? Because insurance should be your last stop. So that's one of those areas where you look at your friends and colleagues and you say, I really love what you're trying to do, and I agree with you that we want to prove it works, but writing an insurance that pays every 5 years.
Well, that's the challenge, and I know they talk to people. Just I went out and we all talked to the farmers, and they say, well, if it only pays every 25 years, people aren't going to buy this. They're going to think it's not worth it because they're not going to see the results right away. But if it's every 5 years, it's still there's a short enough time in their memory to say, oh yeah, it does pay off. But when you do that, obviously you increase the cost. So. I think figuring out a way, a mechanism for dealing with the every 5 year kind of loss and having a different mechanism for the really catastrophic ones is a great idea.
We've done it. We've got health savings accounts, right?
Oh,
So
good.
it's not like we don't have experience in structuring something that does that, you know.
And also, there are these kind of ancillary things that go along with what, we're doing. that they help. I remember talking to a farmer in northern Ghana and asking, what he needed. And he says, just tell me when the rains are coming.
Yeah, right.
He's like, I'll handle everything else, I just need to know when the rains are coming, right? And so that information about like sea surface temperatures, and things that were going on that could help with the prediction of when the rains. That I think now they have kind of this, heuristic rule of thumb of, well, it has to rain 3 times before we plant, and that's as good as it gets for them in terms of a forecast. They wanted the soil to be be saturated enough that
Sure.
things would germinate. So that's what they needed was not necessarily the insurance part, was just the information. And others were like, now I just need the financing, and if you can get these banks here, and some of the rural banks that we looked at had their portfolio of farmers was 10%, and
Mm,
because they just thought it was too risky. So if there's a way of
yeah.
kind of crowding in the capital, which I think it was you mentioned, alluded to earlier, and so getting the banks to at least make the loans, that's again, that's what they said. So I think looking at these things holistically really is what you guys were doing was kind of ahead of the time, because I think it's now recognized as really the way it has to be done.
Yeah, and we had a financial institution that purchased the El Nino insurance in Peru with the explicit objective of expanding lending in the north. Okay. So it is a financial inclusion story when it fits in the right spot, right? Yeah.
Yes, exactly, exactly. So now you've gone from the rainfall. Now, then what was the next level of looking for data that might correlate with agricultural risk?
Well, I guess, we we did some heavy modeling to see if we could actually create a model with a wide range of weather variables over the growing season. It got complex. The answer is that you can do that, and you can create a pretty good model to actually track crop yields, if you will. But in the end, what we've done recently, and I like the most, is a water balance index. That's the difference between precipitation and evapotranspiration, and using it on a daily basis and trying to capture the duration of when you have a drought condition. So now you're getting into something much more applicable, right? As you're going through a growing season and you think about water balance in that environment, in the growing in the soils, it's not, you could use soil moisture as well as if you felt confident with it. You're basically monitoring it so that just like the little trees I plant, um, if it turns off dry for 3 weeks, they're going to die, even though it rained a whole lot at the beginning of the season and it
Right.
rained a whole lot at the end of the season.
Right.
So if you monitor something through the season like that, you can create a pretty suitable index.
So now that gets me to the next thing is technology and some of this monitoring that you're talking about. So are we talking about remote sensing with satellite imagery and the evapotranspiration, or are you talking about actually installing sensors in the ground to track the exact water? What are we talking about
Oh,
here?
you've got a whole spectrum of things that can be done here. The first thing to keep in mind is you want something that's durable, replicable, that doesn't have a tremendous cost associated with it if you're going to enter into these environments. So we're using secondary data, global data from modeling firms like ECWMF, the European Center for Mid-Range Weather Forecasting. Um, they estimate, forecast precipitation right up to the moment. They forecast evapotranspiration. FAO has a way of actually developing an evapotranspiration measure. So if you can use a global data set like that and validate it in the context, it's going to be much more acceptable to the important risk aggregator, the reinsurance side of the world. One of the things that I think we haven't done enough of is dual triggers. You know, this is what we were trying to think about with the group risk plan is, hey, we get the big risk out of the way. Why doesn't the industry come in behind it, purchase the county yield insurance, and then go to the farmer and say, oh, if your yield doesn't, if you don't get the payment you need, we'll pick up the residual, right? With a second payment. And there's all kinds of opportunities for that where you can mitigate, you can blend a parametric solution with an indemnity based insurance. And that's not agriculture, that's across the spectrum.
Yeah. So when I guess whenever we start to weigh in on indemnity based, now I think of the cost, the claims administration costs to
Yeah.
go in, the underwriting cost, all of that, that the underwriters are going to want to know about on the indemnity side. So how do you keep the cost down on the indemnity side to make it affordable?
Tough question.
It's
It,
still being worked through.
yeah, there's a lot of people are drawn to a whole spectrum of technologies, drones, photographs.
Okay.
There's good work being done in that space, and maybe somewhere along the way, AI, machine learning, maybe those things will fit. But one thing to keep in mind, you can build the best system in the world, but if you still got a farmer sitting there next to a farmer that's planting when they're supposed to, doing all the practices that they're supposed to, and you got this guy sitting there, and he kind of gets sleepy, and he doesn't plant until the season is well underway. You can't design any program that's going to work for that.
No, no. And I think that's it's interesting. I met with a group of farmers and they didn't know anything about, moral hazard or anything, but the one guy was like, well, what if, one of the farmers says, I haven't had chicken. I haven't had chicken in a while. I'm getting hungry for some chicken, and I want to collect it. Maybe my insurance will pay for that. And
Oh,
then
I think he did know about moral hazard.
so yeah, he just didn't know. Yeah, exactly what it was, and so yeah, it's like, well, that is something that we have to think about when we're designing these things. So I think what's interesting though is, yeah, there are these technologies, and I think there's a lot of promise. It seems like there's a lot of promise with them and with drones and remote sensing and even sensors, in the ground seem to become cheaper and cheaper. Cameras, being able to take pictures, to kind of verify what's going on in the field and kind of this kind of more
But
collective,
if you took that
intelligence.
picture of the farmer who planted late, he's going to have a loss,
Right.
but he
Yeah.
should be getting paid.
Yeah, exactly. And so I think, well, what would you give as a recommendation for people who want to innovate in this area? Because we are having new technologies out there. We have um, new opportunities. Would you say that the potential is growing overall? The first of that might be my first question. Then the second is, okay, if it is growing and there is much more to be done, what advice would you have? So first, do you think it is growing? Do you think the protection gap is growing, that the need is there, that there's more potential?
There's tremendous need. Um, is insurance the answer? Again, come back, think about it more holistically. Is technology the answer? Again, you need to think hard about what the costs are going to be, what the cost benefits might be. There's a lot of things there. Sometimes just common sense. You know, don't get seduced by your own logic, is what a farmer told me early on, and I've never forgotten what he said to me. I thought it was the best advice for a young professor when that farmer said, "Hey, that was really interesting, but don't get seduced by your own logic." And I've never forgotten that.
or your own ideas of how to reduce the correlation. I remember there was one index I looked at. It was about 23 different variables that they were
Yeah,
they were looking at, and I said, okay, now if we have all these variables, we can really predict what the loss is going to be, And I thought, well, what farmer is going to sign off on that, when you've got all these potential things and wind speed and soil type and and no way to verify it from the farmer's perspective. So I think we can get caught up in that as well.
indeed. I think the thing that I've always said is if you focus on the big risk first, and big risk, I mean the correlated risk, right? Because that impacts a lot of people at the same time. That's when you can do the most damage for a community, for the progress that's being made in the development. And it's just simple logic. If people are living on the edge of poverty and they have a big disaster and they get pushed into a poverty trap that they can't get out of, you've slowed down all that progress that you made to get some development in that situation in that area. So think real carefully about what problem you're trying to solve. You can't solve every problem for every individual.
I think you said that initially. You said one of the mistakes you made was in framing the problem.
Yeah,
And so that maybe it would be good advice is make sure that you're framing the problem properly. That sounds like a good one. All right, so last question is what are the kind of the promising areas you see kind of going forward? Initially, when we were talking, and it's kind of been a thread throughout this, is this high idea of anticipatory
yeah.
action. What are some things like that that you see as kind of a promising uh, venture in this particular area?
Well, what's so wonderful to see is that anticipatory action programs today are much more mature than they were,
Hmm.
15 years
And
ago.
let's explain what they are. What's an anticipatory action? What would you?
Early warning, early forecast, early actions to try to, in a collaborative way with the community, with the government, with local stakeholders, with international organizations, to try to get financing in to reduce the problem that's coming. It's just like, El Nino in Peru. When I talked to those stakeholders, they were there. They put themselves in that context. They knew exactly what they would do if they got paid before the extreme flooding would happen. And we're seeing that in such a beautiful way right now. There's like at the moment, I think I read yesterday, there's over 170 anticipatory action programs that are being developed in something like 70 countries in the world.
Wow.
Now, this, 10 years ago, when I was first involved in some of this, there were 30 geeky guys sitting in a basement in Geneva talking about this. And the community has matured. One of my good friends, Pablo Soros, was a very early innovator in forecast based financing with the Red Cross. If we can do more of this, and we can, the information, the ability to actually forecast extreme events, it's going to get better and better.
Yeah.
What I've always tried, I'm an institutional economist. So when I look at a problem, Jim, when I look at one of these problems, I'm trying to frame it, trying to think about how do you build an institutional framework that's going to be ahead of the technology. That's what global parametrics was about. just having that vision that as better information comes, as we have better ability to actually forecast extreme events, let's get ready. Let's build the industry. Let's build the institutions. Let's build the academic community so that they can know what kind of action should be taken if you have that financing. Just keep people out of poverty traps. That's if you can do that in that moment, you've done so much good. And the benefit cost is far greater than coming in after the disaster.
Yes, yes. That's yeah, and that really is promising. And it does sound, I mean, it makes perfect sense too, doesn't it? I think we all know that the return on investment on resilience is much greater, much better use of funding than coming in after the fact and trying to clean up the mess.
And that's why I like the insurance lens, because the insurance lens says something bad happened. And in parametrics, we can rank what's happened with the severity. Is this a 5 year event? Is it a 50 year? Is it a 100 year event? And we know that as it gets to a higher rank, there's more impact and there's more need for financing. So, even the humanitarian community, the development community, all across the spectrum, using that insurance lens, if you will, to think about how to bring financing in has a tremendous role.
And one of the things that I see the insurance industry doing now, which was something that they did before when they were mutuals companies, was looking at their role more than just pricing the risk and making a payment, which is kind of where, I think they've ended up lately. But I think they're starting to see, hold it, we can do more than that. We
Yeah.
can, we can take all this data, we can start to predict, what these are, and we can even help our insureds, manage that risk and prevent the risk going forward. And I think that's kind of they're rediscovering that role, which was the role of insurance companies
Yeah.
back, 200 years ago, even longer than that in Europe with the mutuals that said, we've got a society, we're trying to help all these people in this group, with the data that we have, and let's help give them information, give ourselves information to have fewer losses. And I think,
Yeah.
that is also another, promising piece that I see that's kind of related.
Well, I've been saying if you can turn insurance on its side to pay to prevent losses rather than pay for losses, you've really made some progress.
Yeah. Well, Jerry, you've given us a lot to think about in terms of innovation and some just great examples and the way you've worked through risk through all these years and starting back, I didn't know even with the PhD student, your agricultural risk management lens that you started off with kind of served you well throughout your entire career, and you've certainly been a benefit to the larger society as a whole. And we wish you success going forward.
Jim, if you grow old, you should have some experience to share back, and I'm very delighted to do that. We've made our mistakes along the way, but I'm happy to talk to anybody and help them think through these problems. Because as I always tell my PhD students, until you frame the problem, you should be working on a solution, right? And
That's right.
that's a big part of this topic too.
That's great. Good advice. Well, thanks again, Jerry, and good luck with your new endeavors.
Thank you.